Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Greetings and welcome to the College Investor Audio Show. Today, let's talk about socially responsible investing and how to invest in companies that match your values. So important. So how do you invest in companies that are good citizens and align actually with your values? Is it really any different from traditional investing? Today, we're talking about socially responsible investing. First of all, what is it? SRI. It's also called green or ethical investing. It's just investing in companies that aren't damaging the environment and are generally beneficial to society. This excludes companies that engage in the production of alcohol, tobacco, gambling, and weapons, just to name a few. Think of a socially responsible company as a good neighbor. A good neighbor doesn't play loud music, destroy other people's property, or have a messy yard. SRI companies play a similar role. They don't pollute the environment, aren't using suppliers who are bad actors, and aren't doing things that upset the surrounding community. Additionally, the social aspect looks at how well the company treats its employees and customers. Also, very important. Some people interpret SRI to mean sustainable, responsible, and impact investing. So, sustainable means a company is making efficient use of its resources and using renewable sources of energy. Responsible is similar to the SRI's social component, and impact looks at the specific impact a company is having in the grand scheme of things, like the 30,000-foot view of the world. SRI versus ESG. Let's talk about that for a second. So you may have heard the term ESG. It stands for Environmental, Social, and Governance. SRI doesn't compete with ESG. ESG is a sub-component of SRI. So SRI is broad. There are many companies that meet its criteria. ESG allows you to focus on specific areas of SRI. Here's an example. If you want to invest in SRI companies, but specifically those that are friendly to the environment, you are focusing on the E part of ESG. This means analyzing how well companies are using their resources. Are they using renewable sources of energy? Are they polluting the environment? And are they using water efficiently? There aren't really strict definitions for each ESG component. Of course, the more strict your criteria for meeting ESG, the fewer companies there will be for you to invest in. Also, consider companies that might not currently meet ESG standards but are working towards them. Those companies may still be viable investments, assuming they remain on that ESG path. Now, we covered the social aspect earlier, but just to reiterate some of its important points, social companies are those that are not disrupting their local communities and are providing an overall benefit to those communities. This includes the company's employees and customers. Good governance means a company allows outside shareholder voting. It has a diversified board of directors, and its management team may be diversified with women and minorities. Here's a look at SRI and stock performance. So while investing in SRI companies is certainly a noble endeavor, it doesn't mean those companies are going to actually perform well. SRI companies have to stand up to the same analytic scrutiny of any other publicly traded company. If an SRI company meets ESG standards but is not generating a profit, there's a good chance its stock is going to decline. As an investor, you have to use the same analysis of stock price to value. As with any company, you might find an SRI company that exactly aligns with your values, but after analyzing its financials, you determine that the stock price is just way overvalued, and the future of the company doesn't look so bright. Investing in such a company, whether SRI or not, probably not a good financial choice. Investing in SRI greatly narrows the field of potential investments, too. Of the group of SRI companies, the field narrows even further when factoring in stocks that present good value in the stock market. Just keep in mind that SRI is generally a long-term investment strategy, meaning it can take years for an SRI stock to experience a material appreciation. So with a good understanding of what SRI is, how do you actually get started doing this? Just like any stock or sector, you can invest directly in a company through its stock or maybe choose a fund. SRI stocks. You'll need to do most of the analysis by yourself when investing directly in SRI stocks. Probably the best way to find these stocks is just to Google the criteria you're looking for with SRI in the search term. There are a lot of websites that follow certain SRI stocks. SRI funds. Funds make investing in SRI stocks easy. There are a ton of SRI funds to choose from. So, one way to screen these funds is through Natural Investments Screener. And that's just naturalinvestments.com. Unfortunately, though, their screener actually doesn't list each fund's ticker. You'll need to copy the fund name and drop it into Google to actually get its ticker. So the bottom line is SRI just allows you to align your values with investments. It puts the focus on companies that are doing good in the world and benefiting society. Through SRI, you can channel your investments into companies that meet your specific ESG criteria. That's what we have for today. Just in case you had learned about socially responsible investing, you want to dive deeper into this. This was just a short podcast today, and you can delve deeper into this big time at thecollegeinvestor.com. We also have the resources and links and websites and stuff that I mentioned during the podcast too. You can find those, again, just search for socially responsible investing at thecollegeinvestor.com. Thanks again for stopping by, and we'll talk to you again very soon.